Hi guys! Today we're going to be talking about appraisals. Now I'm located in Florida and my name's Gabby Letourneau, your local Florida mortgage lender with Ameris Bank and loansbygabby.com. If you don't know what an appraisal is, it's a report that is used to estimate the current market value for real estate. Now I require an appraisal as a lender, so I make sure the property is actually worth, at minimum, for what it's being sold for. It's not going to be in your best interest or anybody's, the sellers, the lenders, the buyers' best interest to lend money on something that the value just isn't there. It's not worth the value. That's like saying, I'll give you $20 for that carton of milk. We don't want to do that. Now, of course, just like with anything, there are pros and cons of an appraisal. Since I tell bad news first, let's start with the cons. Now, an appraisal can break a whole deal. How so? Well, if the appraisal comes back under value, then the appraisal is saying the real estate is not worth what you agreed upon to sell or buy it as. Buyers may now need to back out of the deal because they either A, don't want to pay more for something than it's worth, or B, they don't have the money in cash to pay the difference. Now, the difference, what do I mean by this? Let's say you're purchasing a property for $450,000, but the appraisal comes back at $425,000. That's a $25,000 difference in the contract price versus the appraised price. Now, as a lender, I'm only able to loan monies on the appraised value or on the contract price, whichever is lesser. So in this case, I would loan off the appraised value. Now, if the seller does not want to drop their price to $425,000, which would technically be market value, then the buyer would need to come up with the difference of the $25,000 to bring to closing. Now, if the buyer does not have an extra $25,000 to bring, then they would have to walk away from the deal. All right, so bad news is out of the way. Let's talk about the pros. Using the same example as before, you're under contract for $450,000 and the appraisal comes back at $460,000. You now have $10,000 in equity in the home. Now, as a buyer, that appraisal's for you. You paid for it, not the seller. You do not need to share the appraisal result with anybody, not even your realtor. Now you can tell them that the appraisal came back good and we are proceeding with the purchase. Because I, as the lender, typically do that for you, you shouldn't have to worry about that unless questions are raised. Now, if the appraisal comes back low, I will ask you if it's okay with you for me to share with your realtor so they can help you negotiate the price down, because that's what your realtor's there for. They're there to help you negotiate. Now, it can be used as a negotiating tool, and most of the time it works really well. The seller usually realizes that they will most likely not be able to sell the property above market value, so they typically come down in price. Don't be afraid to use the appraisal to your advantage. Even if you're purchasing with cash, it's still a good idea to get an appraisal done to cover your bases and make sure you aren't spending more than that property is worth. This is Gabby Letourneau, your local Florida mortgage lender with Ameris Bank and loansbygabby.com. I'd love to connect with you, so send me an email, call me, or text me, and then also, of course, subscribe to my channel. I am looking forward to hearing from you. Bye, guys. Hi, guys. Today, we're going to be talking about appraisals. Now, I'm located in Florida, and my name's Gabby Letourneau, your local Florida mortgage lender.